We always like to start by talking about the performance history. And as you know, you can see the history going back all the way to 2011 since inception. And things were going very well up until probably 2021. And then I think we talked about how 2022 and 2023 and 2024 were particularly disappointing. But luckily, this year, 2025, is starting to look up, and some of the forces that have caused the underperformance in 2023 and 2024 are now behind us. But we'll also talk later why we think this has just started and there is more for these forces to run, and why we're very optimistic about this year and the next few years to come. Just a quick look at what our portfolio looks like today. Aubrey and I will get into more details a bit later. But our top 10 holdings, which you probably have seen in the latest fact sheet, you'll see kind of a few things from that, and applies just as equally to the rest of the portfolio. I'd highlight that we own fewer US names than we have in the past. But more importantly, our portfolio tilts very conservatively. Now, that has cost us some underperformance, especially in the second half of 2024. But we have and continue to believe that conservatism is the right position to have in this market environment. We think it's served us well over time. It's serving us very well this year. It did very well for us in the market turmoil in April. And because we expect more of that, we expect that it will continue to serve us well. And just looking at the asset allocation, we've talked about this in the past. Our preferred measure is to look at asset allocation by revenue. This is how we look at the portfolio. This is how we think about investing. And it basically is the economic way of looking at our risk exposure. Where do the businesses that we own, where do they get their revenues? Where are they economically exposed? On the right, you'll see the traditional way that our industry looks at portfolio allocation. We report this because we want you to see the difference. You'll see that our exposure to US listed companies is at an all-time low. It's also about a third of the exposure that's in the index. So we're really positioned in a way that fits the views that we've been talking about for a while. And then, like I said earlier, has served us well this year. Let's look at the past 12 months and maybe dig a bit deeper into the sources of performance, what contributed to gains and what contributed to losses. You'll see that Unilever, Richemont, Alphabet, Alstom, and Bright Horizons have been major contributors to our performance over the past 12 months. And we had 5 detractors. The biggest two, Vistry and Vestas, have been very disappointing, and a lot of that actually happened in Q4 of 2024. We think this is a temporary drawdown, and we think that they will recover. They've, to some degree, have already recovered from what we think are short-term issues. But Samsung, UPS, and Brenntag have also been a drag over the past 12 months. And we might, I think some of the questions that we got, we'll address that, but please feel free to also ask any questions throughout the session. But this is the thing I want to focus on the most. The current portfolio that we own and the reason for our optimism. This is one of the most attractive portfolios that we have ever owned in the history of Mayar. You will see that over time, the attractiveness of what's in the portfolio, and we'll look a bit at what is outside the portfolio in terms of attractiveness, but what's in the portfolio today, you'll see that red line showing you where we are in terms of the expected or estimated upside from our portfolio over the next 3 years. And you'll see there are very few periods over the past several years where the portfolio of the businesses that we own has been as attractive as the one we own today. And this is in spite of what we think is a very conservative tilt in the portfolio. So we think we are tilted very conservatively, protecting our downside in this volatile environment. But at the same time, we own attractive positions where we have a high degree of confidence that they are both undervalued but also present us with attractive, high quality growth over the next several years.